Let's get ready for the Maryland real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Let's begin with a review of Maryland real estate law and practice. Fair housing laws in Maryland. Which of the following practices is prohibited under the Fair Housing Act as enforced in Maryland? Is it A, refusing to rent to someone with a history of violence? B, charging higher rent based on the tenant's race? C, declining a tenant with a pet in a no-pet building? Or D, setting income requirements for potential tenants? The answer is B, charging higher rent based on the tenant's race. The Fair Housing Act prohibits discrimination in housing based on race, color, national origin, religion, sex, familial status, or handicap. Charging higher rent based on race is discriminatory. Who is responsible for enforcing the Fair Housing Act in Maryland? Is it A, Maryland Department of Housing and Community Development? B, U.S. Department of Housing and Urban Development, HUD? C, Maryland Bankers Association? Or D, Real Estate Regulatory Authority? The answer is B, U.S. Department of Housing and Urban Development, HUD. The U.S. Department of Housing and Urban Development, HUD, is responsible for enforcing the Fair Housing Act across all states, including Maryland, ensuring non-discrimination in housing.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which class is not covered under Maryland's fair housing laws but is protected under federal law? Is it A, race? B, familial status? C, source of income? Or D, color? The answer is C, source of income. Source of income is explicitly protected under Maryland law, but it is not listed among the federally protected classes. Federal law includes race, color, national origin, religion, sex, familial status, and disability. Which of the following is considered a discriminatory practice in Maryland under fair housing laws? Is it A, requiring a larger security deposit from families with children? B, conducting a criminal background check on all applicants? C, refusing to rent to individuals with a poor credit history? Or D, setting quiet hours for all tenants? The answer is A, requiring a larger security deposit from families with children. Requiring different security deposits based on familial status, such as having children, is discriminatory under Maryland and federal fair housing laws. In Maryland, which of the following is a lawful exemption to fair housing laws? Is it A, renting a unit in a building with 4 or fewer units where the owner occupies one of them? B, any property rented by a real estate broker? C, a private club renting to its members only? Or D, all properties owned by religious organizations? The answer is A, renting a unit in a building with 4 or fewer units where the owner occupies one of them. The Mrs. Murphy exemption allows renting a unit in an owner-occupied building with no more than 4 units without violating fair housing laws. Private clubs and religious organizations also have certain exemptions. What is the primary responsibility of the Maryland Commission on Civil Rights concerning fair housing? Is it A, to provide housing to those in need? B, to impose taxes on discriminatory properties? C, to investigate complaints of housing discrimination? Or D, to issue real estate licenses? The answer is C, to investigate complaints of housing discrimination. The Maryland Commission on Civil Rights is tasked with investigating and resolving complaints of housing discrimination to ensure compliance with state fair housing laws. Which of the following classes is specifically protected under Maryland fair housing laws, but not explicitly under federal fair housing laws? Is it A, race, B, color, C, marital status, or D, national origin? The answer is C, marital status. Maryland fair housing laws expand protections beyond federal standards, including marital status as a protected class, while federal laws do not explicitly cover marital status. Real estate contracts in Maryland. What is the primary purpose of a time is of the essence clause in a Maryland real estate contract? Is it A, to allow parties to modify deadlines at their convenience? B, to legally bind parties to specific deadlines and timelines in the contract? C, to provide general guidelines for contract performance? Or D, to allow for the extension of contract completion dates? The answer is B, to legally bind parties to specific deadlines and timelines in the contract. The time is of the essence clause in Maryland real estate contracts underscores the strict requirement for parties to adhere to deadlines and terms specified in the contract. Which condition must a Maryland real estate contract include to be considered legally binding? Is it A, a notary seal, B, consideration, C, a witness signature, or D, an earnest money deposit? The answer is B, consideration. A legally binding real estate contract in Maryland must include consideration, meaning something of value promised in exchange for property or service. In Maryland, what is an as-is clause typically meant to signify in a real estate sales contract? Is it A, the property will be sold without any warranties or repair obligations from the seller? B, the seller must complete all requested repairs before closing? C, the property is priced below market value due to its condition? Or D, the buyer has no right to inspect the property? The answer is A, the property will be sold without any warranties or repair obligations from the seller. An as-is clause in a Maryland real estate contract indicates that the seller will not make any repairs or improvements, and the buyer accepts the property's condition at the time of sale. Under Maryland real estate law, which of the following would typically constitute a breach of contract? Is it A, failure to provide earnest money by the agreed deadline? B, a change in loan interest rate? C, negotiating the closing date? Or D, scheduling multiple home inspections? The answer is A, failure to provide earnest money by the agreed deadline. Failing to meet essential terms, like providing earnest money by the deadline specified in a Maryland real estate contract, typically constitutes a breach of contract. Which Maryland law requires a seller to provide a property condition disclosure or disclaimer statement? Is it A, Maryland Home Protection Act, B, Maryland Code, Real Property Article, C, Maryland Buyer Protection Law, or D, Maryland Real Estate Practice Act? The answer is B, Maryland Code, Real Property Article. The Maryland Code, Real Property Article, requires sellers to provide buyers with either a property condition disclosure or disclaimer statement during the transaction process. In Maryland, what is typically required for an amendment to an existing real estate contract to be valid? Is it A, a verbal agreement between parties, B, a written agreement signed by all parties, C, a notarized document, or D, approval from a real estate attorney? The answer is B, a written agreement signed by all parties. In Maryland, to amend an existing real estate contract, the changes must be documented in writing and signed by all parties involved to ensure the changes are enforceable. Which of the following describes a contingency clause in a Maryland real estate contract? Is it A, a clause stating that time is of the essence, B, a clause allowing either party to back out without penalty, C, a condition that must be met for the contract to be binding, or D, a clause detailing the property description and boundaries? The answer is C, a condition that must be met for the contract to be binding. A contingency clause in a Maryland real estate contract is a provision that requires certain conditions to be satisfied for the contract to be legally binding.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Disclosures required by Maryland law. What is required from Maryland sellers when disclosing property condition to the buyer? Is it A, only verbal disclosure is necessary? B, they must provide a written property disclosure or disclaimer statement? C, no disclosure is required if the property is sold as is? Or D, only foundational issues need to be disclosed in writing? The answer is B, they must provide a written property disclosure or disclaimer statement. Under Maryland law, sellers must provide buyers with a written property disclosure or disclaimer statement. This legal requirement ensures that buyers are well informed about the property condition. When is the Maryland Residential Property Disclosure Statement required? Is it A, only for new construction properties? B, for all residential real estate transactions involving single-family homes? C, only when the buyer requests it? Or D, only if the property is older than 10 years? The answer is B, for all residential real estate transactions involving single-family homes. Maryland law mandates the use of a residential property disclosure statement in most transactions involving single-family homes to disclose known defects and impairments. What is the consequence of failing to provide the required property condition disclosures in Maryland? Is it A, the sale can be voided by the buyer? B, the seller might face legal action or penalties? C, the title insurance will automatically cover any omitted disclosures? Or D, the seller can lose their real estate license? The answer is B, the seller might face legal action or penalties. Sellers who fail to provide the necessary disclosures might face significant legal consequences, including being subject to lawsuits for potential losses incurred by the buyer. Which of the following is not included in the Maryland Disclosure Disclaimer Statement? Is it A, presence of lead-based paint? B, historic designation of the property? C, structural integrity of the foundation? Or D, existence of easements or right-of-way? The answer is B, historic designation of the property. The Maryland Disclosure Disclaimer Statement primarily focuses on physical and environmental conditions of the property. Historic designation is typically handled via separate records, not disclosure statements. How long must a Maryland property seller retain copies of disclosure documents after a transaction? Is it A, no retention requirement exists? B, 3 years after the sale closes? C, 6 months after the transaction date? Or D, 5 years after listing the property? The answer is B, 3 years after the sale closes. Real estate transactions often require document retention for at least 3 years post-closure to address any legal, tax, or dispute issues that may arise. In Maryland, what must a seller disclose about the water systems in their property? Is it A, only if the property has a well? B, the type, condition, and status of any water systems? C, only public water sources? Or D, no disclosure is necessary? The answer is B, the type, condition, and status of any water systems. Maryland law requires sellers to disclose information regarding the type, condition, and operating status of water systems as part of the property condition disclosure to the buyer. Which document must Maryland sellers use to comply with disclosure requirements about property condition? Is it A, Maryland Residential Property Disclosure and Disclaimer Statement. B. Property deed. C. Home inspection report. Or D. Real estate purchase agreement. The answer is A. Maryland Residential Property Disclosure and Disclaimer Statement. The Maryland Residential Property Disclosure and Disclaimer Statement is used for sellers to disclose property conditions. It is a requirement under Maryland law for real estate transactions. Transfer of title in Maryland. What is required for a valid transfer of title in Maryland? Is it A. Oral agreement, B. Written deed, C. Deed with oral confirmation, or D. Witness testimony? The answer is B. Written deed. In Maryland, a valid transfer of title requires a written deed as per state law. This requirement ensures clarity and legal enforcement of property ownership. Which type of deed offers the least protection to the buyer in Maryland? Is it A. General warranty deed, B. Special warranty deed, C. Quitclaim deed, or D. Bargain and sale deed? The answer is C. Quitclaim deed. A quitclaim deed offers the least protection because it does not guarantee that the grantor holds clear title. It simply transfers whatever interest the grantor may have. What is required for a deed to be considered legally valid in Maryland? Is it A. It must be notarized, B. It must have a witness, C. It must be registered with the local real estate board, or D. It must be signed by the grantee? The answer is A. It must be notarized. In Maryland, for a deed to be legally valid, it must be notarized. This ensures that the signing party's identity is verified and the signature is authentic. Who is typically responsible for recording the deed in Maryland? Is it A. the buyer, B. the seller, C. the title company, or D. the real estate agent? The answer is C. the title company. In Maryland, the title company typically records the deed as part of the closing process to ensure the proper transfer of title and public notice of the new ownership. How does Maryland state law regard the priority of recorded deeds? Is it A. first in time, first in right, B. last in time, first in right, C. based on the value of the property, or D. based on the date of the contract? The answer is A. first in time, first in right. Maryland law follows a race notice rule for recording deeds, where the first recorded deed without notice of prior claims takes priority. This system ensures clear public records of property ownership. In Maryland, what is the purpose of a title search during the transfer of title process? Is it A. to verify the property's market value, B. to check for any liens or encumbrances on the property, C. to survey the land and establish boundary lines, or D. to negotiate the purchase price of the property? The answer is B. to check for any liens or encumbrances on the property. In Maryland, a title search is conducted to uncover any liens, encumbrances, or issues with property ownership that could affect the transfer of title. What type of deed is commonly used in Maryland to provide the greatest protection to the buyer? Is it A. quitclaim deed, B. special warranty deed, C. general warranty deed, or D. bargain and sale deed? The answer is C. general warranty deed. The general warranty deed is the most protective for buyers as it includes full warranties against any defects in the title extending back to the property's origins.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Earnest money and escrow in Maryland. What is the purpose of earnest money in a Maryland real estate transaction? Is it A. to act as a loan for the buyer, B. to show the buyer's serious intent? C. To cover closing costs. Or D. To pay the real estate agent's commission? The answer is B. To show the buyer's serious intent. Earnest money serves as a good faith deposit from the buyer to show their commitment to the purchase and is held until closing or release. In Maryland, it indicates the seriousness of the offer. Who is responsible for holding the earnest money in escrow in Maryland? Is it A. The buyer, B. The seller, C. The real estate broker, or D. The title company? The answer is C. The real estate broker. In Maryland, earnest money is usually held by the real estate broker handling the transaction in a designated escrow account, ensuring it's managed according to state laws. What happens to earnest money if a Maryland real estate transaction fails to close due to the buyer's default? Is it A. The buyer gets a full refund, B. The money is transferred to the seller, C. The money is retained by the broker, or D. The money is divided between buyer and seller? The answer is B. The money is transferred to the seller. When a Maryland real estate transaction fails due to the buyer's fault, the seller typically retains the earnest money as compensation for the default. How long must escrow records be maintained by brokers in Maryland? Is it A. 1 year, B. 3 years, C. 5 years, or D. 7 years? The answer is B. 3 years. Maryland real estate brokers are legally obligated to maintain escrow account records for a minimum of 3 years, ensuring compliance with state regulations. In Maryland, what must a broker do if there is a dispute over the distribution of earnest money? Is it A. Decide independently who should receive the money, B. Hold the funds until resolution, C. Give the money to the buyer until further notice, or D. Return the funds to the seller as default policy? The answer is B. Hold the funds until resolution. Maryland law requires brokers to hold earnest money in escrow until the dispute over distribution is resolved, ensuring impartial handling until a final decision is made. In Maryland, what must a broker do with earnest money if all parties agree on its disbursement? Is it A. Return it to the buyer, B. Submit it to the Maryland Real Estate Commission, C. Disperse it according to the agreement between parties, or D. Hold the money until closing? The answer is C. Disperse it according to the agreement between parties. Maryland law requires brokers to disperse earnest money according to written instructions agreed upon by all parties, facilitating an orderly resolution without involving third-party entities. What is the primary function of an escrow account in Maryland real estate transactions? Is it A. To provide a guarantee of seller's performance, B. To hold earnest money until disbursement conditions are met, C. To pay real estate broker commissions, or D. To act as a savings account for buyers? The answer is B. To hold earnest money until disbursement conditions are met. The escrow account's primary role is to securely hold earnest money until the transaction conditions are fulfilled or as directed by mutual agreement or legal obligation, ensuring transaction integrity. Maryland real estate taxes. What tax is primarily used to fund public services like schools and infrastructure in Maryland? Is it A. Property tax, B. Sales, C. Income, or D. Inheritance tax? The answer is A. Property tax. In Maryland, property tax is the primary source of funding for local public services, including schools, infrastructure, and public centers. This helps maintain the community's facilities and services. Which Maryland tax provides a tax credit for homeowners who qualify based on their income? Is it A. Homeowners Property Tax Credit, B. Homestead Property Tax Credit, C. Transfer Tax Credit, or D. new home credit? The answer is A, homeowner's property tax credit. The homeowner's property tax credit limits the amount of property taxes paid based on income. To qualify, homeowners must meet certain income and home value criteria outlined by Maryland law. The homestead tax credit in Maryland is intended to accomplish which of the following? Is it A, limit the amount of property assessment increase? B, provide a deduction based on home repair expenses? C, offer tax relief for multi-unit properties? Or D, adjust property tax rates annually? The answer is A, limit the amount of property assessment increase. The Maryland Homestead Tax Credit limits annual increases in taxable assessments to prevent unexpected large tax bill increases. This is applicable only to a homeowner's primary residence. In Maryland, how often is a reassessment of property value for tax purposes conducted? Is it A, every 3 years, B, annually, C, every 5 years, or D, biannually? The answer is A, every 3 years. In Maryland, property values are reassessed every 3 years by the State Department of Assessments and Taxation to ensure property taxes reflect current market value. What is the role of the Maryland Department of Assessments and Taxation regarding real estate? Is it A, to oversee property assessments and provide regulatory oversight? B, to collect property taxes directly from homeowners? C, to manage housing finance programs? Or D, to enforce federal housing requirements? The answer is A, to oversee property assessments and provide regulatory oversight. The Maryland Department of Assessments and Taxation is responsible for property assessments, ensuring they reflect market values accurately for tax purposes. It also provides regulatory oversight, but not tax collection. What is the transfer tax rate for residential properties in Maryland? Is it A, 1% of the property's value, B, 0.5% of the purchase price, C, 2% of the assessed value, or D, 1.5% of the mortgage amount? The answer is B, 0.5% of the purchase price. The transfer tax in Maryland for residential properties is typically 0.5% of the purchase price, although local variations might apply. Maryland's real estate transfer taxes are essential for understanding property transaction costs. For Maryland real estate taxes, what is the significance of the ESTAT's triennial assessment process? Is it A, it adjusts the local tax rates annually? B, it ensures property values are updated every 3 years? C, it offers tax exemptions for senior citizens automatically? Or D, it doubles the assessed value of properties? The answer is B, it ensures property values are updated every 3 years. The triennial assessment by Maryland's State Department of Assessments and Taxation ensures property values reflect current market trends every 3 years, which affects the tax liability. Maryland real estate licensing and regulation. What is the minimum age requirement for obtaining a real estate salesperson license in Maryland? Is it A, 16 years, B, 18 years, C, 21 years, or D, 25 years? The answer is B, 18 years. In Maryland, the minimum age requirement to apply for a real estate salesperson license is 18 years, as per the Maryland Real Estate Commission's regulations. What is the duration of the pre-licensing education requirement for a Maryland real estate salesperson? Is it A, 20 hours, B, 40 hours, C, 60 hours, or D, 75 hours? The answer is D, 5 hours. Maryland mandates that prospective real estate salespersons complete 75 hours of approved pre-licensing education to ensure adequate industry knowledge and readiness. Who oversees the regulation and licensing of real estate professionals in Maryland? Is it A, the Maryland Real Estate Commission, B, the Maryland Department of Commerce, C. The Federal Trade Commission, or D. The National Association of Realtors? The answer is A. The Maryland Real Estate Commission. The Maryland Real Estate Commission is the primary regulatory authority responsible for issuing licenses and enforcing real estate law compliance throughout the state. How often must a real estate salesperson in Maryland renew their license? Is it A. Annually, B. Every 2 years, C. Every 3 years, or D. Every 5 years? The answer is B. Every 2 years. Maryland real estate licenses must be renewed every 2 years, ensuring agents remain up to date with continuing education and regulatory standards. Which of the following is a requirement for maintaining an active real estate license in Maryland? Is it A. Maintaining a minimum sales quota, B. Completing continuing education hours, C. Passing an exam each renewal period, or D. Submitting monthly sales reports? The answer is B. Completing continuing education hours. To maintain an active license, Maryland real estate professionals must complete required continuing education courses, fostering ongoing professional development and compliance with industry regulations. Which entity is responsible for administering real estate licensing in Maryland? Is it A. Maryland Real Estate Commission, B. Maryland Association of Realtors, C. Maryland Department of Real Property, or D. Maryland Licensing Board? The answer is A. Maryland Real Estate Commission. The Maryland Real Estate Commission, under the Maryland Department of Labor, is tasked with licensing and regulating real estate professionals to protect the public interest. What is one of the primary duties of the Maryland Real Estate Commission? Is it A. Conducting marketing campaigns, B. Issuing real estate licenses, C. Providing legal representation, or D. Setting national real estate standards? The answer is B. Issuing real estate licenses. One primary duty of the Maryland Real Estate Commission is issuing licenses to individuals who qualify under state guidelines, thereby ensuring adherence to local real estate laws.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Maryland Real Estate Commission. What is the primary function of the Maryland Real Estate Commission? Is it A. To manage real estate listings across the state, B. To enforce real estate laws and regulate licenses, C. To control property tax rates throughout the state, or D. To set guidelines for housing market prices? The answer is B. To enforce real estate laws and regulate licenses. The Maryland Real Estate Commission is responsible for enforcing real estate laws and regulating the licensing of real estate professionals in Maryland. It ensures compliance with state regulations to maintain professionalism and standards within the industry. Which of the following actions can MREC take against a licensed agent found violating real estate laws in Maryland? Is it A. Impose fines and penalties, B. Imprison the agent immediately, C. Offer tax incentives, or D. Modify contract terms? The answer is A. Impose fines and penalties. The Maryland Real Estate Commission has the authority to impose fines, suspend licenses, and take disciplinary action against agents who violate real estate laws, ensuring compliance and protecting public interest. What is required for a real estate agent to renew their license in Maryland? Is it A. Pay a renewal fee without any additional requirements, B. Complete continuing education courses approved by MREC, C. Submit a new application and take an exam, or D. Present a financial audit report? The answer is B. Complete continuing education courses approved by MREC. To renew a real estate license in Maryland, agents must complete continuing education courses approved by the Maryland Real Estate Commission. This ensures they remain informed about changes in real estate law and practice. Which of the following is not a responsibility of the Maryland Real Estate Commission? Is it A, issuing real estate licenses to qualified applicants, B, conducting investigations into professional misconduct, C, appraising property values for buyers and sellers, or D, promulgating regulations for licensees? The answer is C, appraising property values for buyers and sellers. The Maryland Real Estate Commission does not appraise property values. This function is performed by certified appraisers. MREC's duties include licensing, regulating, and overseeing real estate professionals to ensure compliance with the law. How often must the Maryland Real Estate Commission review the laws regulating real estate practice? Is it A, once every 2 years, B, annually to incorporate legislative changes, C, every 5 years unless an urgent issue arises, or D, whenever a consumer files a complaint? The answer is B, annually to incorporate legislative changes. The Maryland Real Estate Commission must regularly review laws and regulations to ensure compliance with any recent legislative changes, typically on an annual basis. This review helps maintain current standards of practice in the real estate industry. Let's continue with a review of Maryland real estate finance. Loan fundamentals. Which type of loan is guaranteed by the Veterans Affairs VA for eligible veterans? Is it A, a Federal Housing Administration FHA loan, B, conventional loan, C, a Veterans Affairs VA loan, or D, a U.S. Department of Agriculture USDA loan? The answer is C, Veterans Affairs VA loan. VA loans are backed by the Veterans Affairs and are available to eligible veterans, offering benefits like no down payment and no private mortgage insurance. What is the primary purpose of a mortgage loan originator in real estate finance? Is it A, to assess the property's market value, B, to arrange financing between borrowers and lenders, C, to manage property insurance policies, or D, to enforce zoning regulations? The answer is B, to arrange financing between borrowers and lenders. Mortgage loan originators, also known as loan officers, help borrowers apply for loans and navigate the process of securing mortgage financing from lenders. Which of the following is a common feature of adjustable rate mortgages, ARM? Is it A, fixed interest rate for the entire loan term, B, interest rate remains the same, C, interest rate adjusts periodically based on a specified index, or D, no initial rate cap? The answer is C, interest rate adjusts periodically based on a specified index. Adjustable rate mortgages, ARM, have interest rates that change over time based on a specific index. They often start with a lower initial interest rate compared to fixed-rate mortgages. What is the primary benefit of a borrower opting for a bi-weekly mortgage payment plan? Is it A, reduced interest over the loan term, B, higher lender fees, C, longer loan term, or D, lower monthly payment? The answer is A, reduced interest over the loan term. Bi-weekly mortgage payment plans can significantly reduce the amount of interest paid over the life of the loan by effectively making an extra payment each year, thereby reducing the principal faster. Who holds the title in a deed of trust until the loan is paid off? Is it A, the borrower, B, the lender, C, a trustee, or D, the county? The answer is C, a trustee. In a deed of trust, a neutral third party, called a trustee, holds the legal title to the property until the borrower pays off the loan. This is different from a mortgage where the lender holds the title. What is the purpose of the Maryland Mortgage Program, MMP? Is it A, to provide commercial real estate loans, B, to help first-time homebuyers purchase homes, C. To refinance existing mortgages at lower interest rates. Or D. To offer investment property financing options. The answer is B. To help first-time homebuyers purchase homes. The Maryland Mortgage Program, MMP, helps first-time homebuyers by offering down payment and closing cost assistance, along with competitive interest rates for mortgage loans, making homeownership more accessible. What must a borrower provide to a lender to obtain a conventional mortgage loan? Is it A. Proof of military service, B. Proof of employment, income, and credit history, C. A land use permit, or D. An appraisal from at least 3 different appraisers? The answer is B. Proof of employment, income, and credit history. To obtain a conventional mortgage loan, borrowers generally need to show proof of steady income, employment, and a satisfactory credit history, ensuring the lender of the borrower's ability to repay the loan. Loan types. Which of the following best describes a conventional loan? Is it A. A loan that is guaranteed by the federal government, B. A loan that is issued by private lenders and not insured by the government, C. A loan that requires private mortgage insurance for all borrowers, or D. A loan that originated solely through the Federal Housing Administration? The answer is B. A loan that is issued by private lenders and not insured by the government. Conventional loans are private loans that do not have government insurance. They are typically offered by banks and mortgage companies and may require private mortgage insurance if the down payment is less than 20%. What distinguishes an FHA loan from a conventional loan? Is it A. FHA loans are insured by the Federal Housing Administration, B. FHA loans are only available to first-time homebuyers, C. FHA loans do not require mortgage insurance, or D. FHA loans have no maximum borrowing limits? The answer is A. FHA loans are insured by the Federal Housing Administration. FHA loans are insured by the Federal Housing Administration, providing better terms for borrowers and higher approval chances for those with lower credit scores. They require both upfront and annual mortgage insurance premiums. What restriction is specifically related to VA loans? Is it A. VA loans require a down payment of at least 10%, B. VA loans are only available for primary residences, C. VA loans require private mortgage insurance, or D. VA loans are available to all veterans regardless of discharge status? The answer is B. VA loans are only available for primary residences. VA loans are a benefit for veterans, providing 100% financing and not requiring mortgage insurance, but they are restricted to primary residences. The borrower must certify they intend to live in the home. What is a primary feature of USDA loans? Is it A. USDA loans require a substantial down payment, B. USDA loans guarantee funding for urban properties, C. USDA loans are only available to high-income borrowers, or D. USDA loans are issued by the U.S. Department of Agriculture? The answer is A. USDA loans require a substantial down payment. USDA loans offer 100% financing for purchasing homes in designated rural and suburban areas, not requiring a down payment. This helps low to moderate income individuals purchase a home with minimal initial funds. What is the purpose of private mortgage insurance, PMI, in conventional loans? Is it A. To protect the borrower in case of default, B. To reduce the interest rate for qualified buyers, C. To allow borrowers to make a smaller down payment, or D. To ensure the loan meets government housing objectives? The answer is C. To allow borrowers to make a smaller down payment. Private mortgage insurance, PMI, is often required for conventional loans with less than a 20% down payment to protect lenders, enabling borrowers to purchase homes with lower upfront costs. What is a key feature of Federal Housing Administration FHA loans? Is it A. They are only available to military veterans. B. They require private mortgage insurance, PMI. C. They allow for lower down payments compared to conventional loans. Or D. They have no maximum loan amount. The answer is C. They allow for lower down payments compared to conventional loans. FHA loans are insured by the Federal Housing Administration and allow for lower down payments, making them more accessible to lower-income borrowers. Which type of loan is specifically designed for rural and agricultural areas? Is it A, a conventional loan, B, a Veterans Affairs VA loan, C, a Federal Housing Administration FHA loan, or D, a U.S. Department of Agriculture USDA loan? The answer is D, a U.S. Department of Agriculture USDA loan. USDA loans are backed by the U.S. Department of Agriculture and provide several benefits, including zero down payment to encourage home ownership in rural and agricultural areas. Loan qualifications. What is the primary purpose of obtaining a loan pre-approval in Maryland real estate finance? Is it A, determine the property's value, B, ensure buyers can afford the home they are interested in, C, negotiate lower interest rates, or D, reduce closing costs? The answer is B, ensure buyers can afford the home they are interested in. Loan pre-approval establishes the maximum loan amount a prospective homebuyer qualifies for. This ensures they can pursue properties within their financial reach, thereby streamlining the acquisition process. Which financial aspect is not typically considered when determining a borrower's loan qualifications in Maryland? Is it A, credit score, B, employment history, C, home inspection report, or D, debt-to-income ratio? The answer is C, home inspection report. Loan qualifications focus on the borrower's financial profile, such as credit score and debt-to-income ratio. A home inspection report, however, evaluates the property condition and doesn't affect the borrower's qualification directly. In Maryland, what is the role of the debt-to-income DTI ratio in loan qualifications? Is it A, it assesses the value of the property, B, it determines the market interest rate, C, it evaluates a borrower's ability to manage monthly payments, or D, it is used to calculate down payments? The answer is C, it evaluates a borrower's ability to manage monthly payments. The debt-to-income DTI ratio is vital in loan qualification processes, measuring the borrower's recurring monthly debt payments relative to monthly income to evaluate their ability to manage new and existing obligations. What document is most frequently required to verify a borrower's income in Maryland loan applications? Is it A, credit report, B, property appraisal, C, tax returns, or D, home inspection report? The answer is C. Lenders typically require tax returns as part of the loan application process to confirm the borrower's income, offering a historical financial overview essential for calculating loan eligibility. Which Maryland law directly impacts loan qualifications by prohibiting discrimination based on race, color, or national origin? Is it A, Maryland Fair Housing Act, B, Truth in Lending Act, C, Real Estate Settlement Procedures Act, or D, Maryland Real Property Law? The answer is A, Maryland Fair Housing Act. The Maryland Fair Housing Act is pivotal in preventing discrimination in real estate transactions, ensuring all applicants are assessed fairly, regardless of race or origin, impacting loan qualifications significantly. What factor is most critical for a lender to consider when assessing a borrower's loan application? Is it A, credit score, B, property location, C, intended use of the property, or D, borrower's age? The answer is A, credit score. Lenders place significant weight on a borrower's credit score because it predicts the likelihood of loan repayment based on past behavior. A high credit score generally leads to better loan terms. Which document is often used to verify a self-employed borrower's income during the loan approval process? Is it A, pay stubs, B, tax returns, C, bank statements, or D, employment verification letter? The answer is B, tax return. Lenders require self-employed borrowers to submit tax returns to verify income because this document includes detailed financial information, ensuring an accurate assessment of income stability and repayment capability.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
The loan application process. What is the primary purpose of the loan application in Maryland real estate finance? Is it A, to determine the borrower's creditworthiness, B, to finalize the purchase agreement, C, to provide buyers with a legal explanation of the terms, or D, to negotiate the interest rate with lenders? The answer is A, to determine the borrower's creditworthiness. Loan applications in Maryland real estate finance determine a borrower's creditworthiness, gathering financial details crucial for loan approval or denial. This impacts further loan processing. Which document typically accompanies a loan application to verify a borrower's income? Is it A, purchase agreement, B, credit report, C, pay stubs or tax returns, or D, deed of trust? The answer is C, pay stubs or tax returns. In Maryland, providing pay stubs or tax returns verifies income in a loan application, helping lenders determine employment stability and income adequacy for loan approval. What part of the loan application process involves examining a borrower's debt-to-income ratio? Is it A, employment verification, B, credit evaluation, C, property appraisal, or D, loan estimate issuance? The answer is B, credit evaluation. The debt-to-income ratio is examined in Maryland during credit evaluation to assess a borrower's ability to manage monthly payments and financial commitments, crucial for loan approval. What form must borrowers sign to allow lenders to access their tax return information? Is it A, Form W-2, B, Form 4506T, C, Form 1040, or D, Form HUD-1? The answer is B, Form 4506T. Form 4506T is crucial in the loan application process in Maryland as it authorizes lenders to receive a transcript of tax returns, verifying income information provided by the borrower. Who is responsible for truthfully completing the loan application in the loan process? Is it A, the borrower, B, the real estate agent, C, the lender, or D, the appraiser? The answer is A, the borrower. In Maryland real estate finance, the borrower must truthfully complete the loan application, providing precise information essential for the lender's accurate creditworthiness assessment and mortgage approval process. During the Maryland loan application process, what information is required to evaluate a borrower's creditworthiness? Is it A, previous addresses, B, credit report, C, employment benefits, or D, tax deductions? The answer is B, credit report. Creditworthiness is mainly assessed through a borrower's credit report, which details their credit history, outstanding debts, and payment behaviors. Lenders use this information to determine the risk of lending. Underwriting for Maryland real estate. What is the primary purpose of underwriting in Maryland real estate finance? Is it A, to set the interest rate for a mortgage, B, to assess the risk of lending to a borrower, C, to market the property to potential buyers, or D, to negotiate the terms of the real estate contract? The answer is B, to assess the risk of lending to a borrower. Underwriting in Maryland real estate finance involves evaluating the risk associated with lending to a borrower. This assessment helps determine loan approval, terms, and interest rates. Which factor is not typically considered in the underwriting process for Maryland real estate? Is it A, credit score, B, income stability, C, applicant's age, or D, debt-to-income ratio? The answer is C, applicant's age. The underwriting process typically considers credit score, income stability, and debt-to-income ratio to assess a borrower's risk. Age is generally not factored into this evaluation. In Maryland real estate finance, what role does property appraisal play in underwriting? Is it A, it determines the final purchase price of the property, B, it serves as a tool for setting property taxes, C, it helps determine the loan amount a borrower can receive, or D, it is used primarily for market analysis by real estate agents? The answer is C. It helps determine the loan amount a borrower can receive. In Maryland real estate finance, property appraisal ensures that the home's value supports the mortgage loan amount. Lenders rely on this to avoid over-lending on a property. How does the debt-to-income ratio, DTI, affect the underwriting process in Maryland real estate? Is it A, it determines the loan interest rate, B, lenders use it to evaluate the borrower's ability to repay the loan, C, it is a measure of the property's market value, or D, it is only considered for high-risk loans? The answer is B. Lenders use it to evaluate the borrower's ability to repay the loan. The debt-to-income ratio, DTI, is essential in the underwriting process in Maryland real estate to evaluate a borrower's financial capacity to manage additional debt and repay the loan. What is the significance of the loan-to-value ratio, LTV, in the underwriting process for Maryland real estate? Is it A, it helps determine the borrower's income, B, it assesses the risk level of the loan for the lender, C, it is used to set homeowners' insurance premiums, or D, it dictates the loan repayment schedule? The answer is B. It assesses the risk level of the loan for the lender. In Maryland real estate, the loan-to-value LTV ratio is crucial for assessing the loan's risk. Lenders use it to ensure that the loan amount is proportionate to the property's actual value. What is a key consideration when assessing the creditworthiness of a borrower in Maryland real estate underwriting? Is it A, borrower's employment history, B, zoning laws applicable to property, C, location of the property, or D, type of mortgage product chosen? The answer is A, borrower's employment history. Evaluating a borrower's creditworthiness involves reviewing their income, employment history, and credit score. The Maryland Department of Assessments and Taxation sets guidelines for these evaluations. Loan closing. What is the primary purpose of a loan closing in Maryland real estate? Is it A, to finalize the loan agreement and transfer ownership, B, to determine the buyer's creditworthiness, C, to offer refinance options to the buyer, or D, to appraise the property for market value? The answer is A, to finalize the loan agreement and transfer ownership. The loan closing finalizes the real estate transaction, documenting and executing the legal ownership change and implementing the loan terms agreed upon by both parties. Who is typically responsible for recording the deed after a Maryland real estate closing? Is it A, the lending institution, B, the real estate agent, C, the title company or attorney, or D, the seller? The answer is C, the title company or attorney. In Maryland, a title company or an attorney typically handles recording the deed to ensure it is officially entered into public records, finalizing ownership transfer. Which document outlines the final terms of a loan at closing in Maryland? Is it A, the loan estimate, B, the promissory note, C, the purchase agreement, or D, the credit report? The answer is B, the promissory note. The promissory note is integral at closing, setting out the borrower's promise to pay the specified loan amount, interest rate, and payment schedule. What does the closing disclosure form in Maryland typically show? Is it A, ownership history of the property, B, the final costs and terms of the mortgage, C, an analysis of local property taxes, or D, a review of the buyer's employment history? The answer is B, the final costs and terms of the mortgage. Maryland's closing disclosure form is crucial for detailing the final loan costs, including interest rates and payment schedules, ensuring transparency and agreement between lender and borrower. What must occur before the loan funds are dispersed in a Maryland real estate transaction? Is it A, all parties signing the closing documents, B, the property inspection is completed, C, the mortgage company issues a pre-approval letter, or D, the buyer submits a loan application? The answer is A, all parties signing the closing documents. In Maryland, fund disbursement hinges on the signed closing documents, confirming all terms are agreed upon by both parties and officially finalizing the transaction. What role does the escrow officer play during a loan closing in Maryland? Is it A, they provide the loan to the borrower, B, they verify the identities of the parties involved, C, they decide on the interest rate of the loan, or D, they appraise the property being financed? The answer is B, they verify the identities of the parties involved. During a loan closing, the escrow officer manages disbursements, verifies identities, and ensures all documents are correctly signed. They do not set interest rates or appraise property. Maryland mortgage disclosure requirements. What is the primary purpose of Maryland's mortgage disclosure requirements? Is it A, to ensure borrowers understand the total cost of their loans, B, to assist lenders in approving more loans, C, to encourage lenders to lower interest rates, or D, to streamline the mortgage application process? The answer is A, to ensure borrowers understand the total cost of their loans. Maryland's mortgage disclosure requirements are designed to make sure borrowers receive clear and comprehensive information about the total cost and terms of their mortgage to make informed financial decisions. Which document must Maryland lenders provide within 3 business days of receiving a mortgage application? Is it A, loan estimate, B, closing disclosure, C, deed of trust, or D, title insurance policy? The answer is A, loan estimate. The loan estimate provides key financial information about the loan and is required by both federal and Maryland state laws to be provided early in the application process. What is required by Maryland law if a mortgage lender changes the terms of the loan offered? Is it A, provide a revised loan estimate, B, notify the borrower in writing within 30 days, C, adjust the loan to the initial estimates without notice, or D, offer an interest rate reduction? The answer is A, provide a revised loan estimate. Maryland laws stipulate that lenders must provide revised disclosures, such as a revised loan estimate, if there are significant changes to the loan terms, ensuring borrowers always have up-to-date information. Who enforces Maryland's mortgage disclosure requirements? Is it A, the Maryland Department of Labor, Licensing, and Regulation, B, the Federal Housing Authority, C, local municipal governments, or D, the Maryland State Police? The answer is A, the Maryland Department of Labor, Licensing, and Regulation. The Maryland Department of Labor, Licensing, and Regulation ensures compliance with mortgage disclosure laws to protect consumers in the real estate finance process. When must the closing disclosure be provided to the borrower in Maryland? Is it A, at least 3 business days before closing, B, at closing, C, 1 week before the closing date, or D, after the closing date? The answer is A, at least 3 business days before closing. The federal TRID regulations, which Maryland follows, require the closing disclosure to be given at least 3 business days before closing, ensuring borrowers have time to review the finalized terms. What disclosure must Maryland mortgage lenders provide about interest rate changes before loan acceptance? Is it A, interest rate change notification, B, redisclosure of interest terms, C, annual percentage rate statement, or D, payment schedule adjustment? The answer is B, redisclosure of interest terms. Maryland mortgage lenders must provide a redisclosure of interest terms if interest rates change between initial disclosure and loan acceptance. This ensures borrowers understand updated terms before committing to the agreement. How soon must Maryland mortgage lenders provide a new loan estimate after a loan term revision? Is it A, 1 business day, B, 3 business days, C, 1 week, or D, immediately? The answer is B, 3 business days. Maryland mortgage lenders are required to furnish a revised loan estimate within 3 business days following any materially revised loan terms. This ensures borrowers receive clear and current loan information.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.